Welcome to our channel. If you invested in cryptocurrency and need to report it correctly on your taxes, follow these step-by-step instructions to handle digital currency transactions properly. Step 1. Understand that the IRS treats cryptocurrency as property, not currency, meaning every sale, trade, or use triggers a taxable event with potential capital gains or losses. Step 2. Gather all cryptocurrency transaction records from every exchange you've used, including Coinbase, Binance, Kraken, and any decentralized platforms. Step 3. Calculate your cost basis for each transaction, which is the amount you paid to acquire the crypto plus any transaction fees. Step 4. Determine your capital gain or loss for each transaction by subtracting cost basis from the fair market value in US dollars at the time of sale or trade. Step 5. Separate short-term gains from cryptocurrency held less than 1 year from long-term gains on crypto held over 1 year, as they're taxed at different rates. Step 6. Report all cryptocurrency transactions on Form 8949 and summarize on Schedule D. Use tax software designed to handle crypto or specialized services like Coin Tracker or Coinly. Step 7. Answer the digital asset question on Form 1040 honestly. Checking yes doesn't automatically trigger an audit. Lying does risk penalties. Step 8. Keep detailed records of every transaction, including dates, amounts, fair market values, and wallet addresses. Consider the tax implications before making trades to avoid surprise tax bills. Don't forget to like this video and subscribe to our channel.